Thank you everyone for joining us today. I'm Megan Lamke, the Director of Marketing at Goodegg Investments. I'm so excited to be sharing with you today about demystifying hotel investing. Before we get started, in case if you haven't heard of us, Goodegg Investments is owned by Julie Lamb and Annie Dickerson. They have been featured on very high-profile podcasts such as So Money by Farnoosh Torabi, Her Money by Gene Chesesky, and Million Acres by The Motley Fool. Our company has been voted Best Real Estate Syndication Company in North America by Build Magazine in 2020. We've also been featured on Bigger Pockets, Her Money, Forbes, Yahoo Finance, Girl Boss, MarketWatch. Since 2017, we've acquired over 7,000 units nationwide, valued at over $900 million. In the past year, we've been able to go full cycle on some of those acquisitions that we had early on in our career, and we're able to achieve our targeted returns of 13 to 18% for our average annual return on those exits. Now that you know a little bit more about Goodegg Investing, I can share a little bit about my background. So prior to joining the Goodegg Investment team, I had worked for fast-growing sales and marketing companies in marketing automation and sales strategy and solutions. During that time, I really honed my experience in becoming certified on several different marketing automation platforms and had acquired a real estate investment portfolio of over 3,000 units nationwide myself. I love real estate investing. I'm so passionate about it. I got started in real estate investing by simply house hacking our primary residence. And once we had paid off the mortgage and sold that home, parlayed that into passive investments in real estate syndication. Fast forward a couple of years, here I am joining the Goodegg team and ready to help demystify hotel investing for you. So maybe you're joining us today because you're curious about investing in hospitality, but you're not sure about any of the risks. Are you wondering whether now is the best time to invest in hotels, or maybe it's the worst? Could it be a hidden gem? Are you familiar with vetting multifamily deals, but you have no idea where to start when it comes to hotels? Do you want to expand outside multifamily investing, but you're just not sure how to evaluate other types of investments? Well, today we're going to add some clarity to all of those questions. So are you ready to learn why the market is ideal for investing in hotels right now? Understand the top 5 reasons for investing in hotel syndications and learn how to quickly evaluate hotel syndications. So let's dive in. First, before we can really understand hotel investing, we need to understand the types of different hotels. So there's 3 main types: full service, select service, and limited service. Full service, this is where you picture dream vacations to Ritz-Carlton or Sandals resorts with all-inclusive type stays, high quality amenities like spa, access, fitness studios, bellhops with luggage and a dedicated butler or concierge service, as well as on-site restaurants and room service. Hotel rates will generally be higher than limited or select service hotel brands simply because of the staff and equipment required to provide all of the amenities that guests expect at this level. On the other side of the spectrum, there's limited service. Picture extended stay hotels like Residence Inn, Comfort Inn, Extended Stay America. These types of hotels have self-service laundry, in-suite kitchens, and the majority of guests book these hotels for 5 days or longer. They tend to provide reduced rates on sliding scale based on how many nights are booked. In the middle, there's this hybrid between full service and limited service called select service. Think of a garden or Hilton Garden Inn, a Courtyard by Marriott, Hyatt Place are the images of classic select service hotels. Limited service hotels usually have the lowest operating costs of the 3 hotel categories, and due to their slim amenities. They appeal to cost-conscious travelers and just provide very few services, So guests get a room for the night, but nothing much else. So why this matters to investors is that each different set of type of hotel has different sets of expenses and expectations for guests. It's very similar to multifamily investing. When you can mitigate the expenses, the higher return you could potentially receive. So think of full service, select service, and limited service, very similar to Class A luxury multifamily, Class B, some light value add, and Class C limited service. So now that we understand the three main types of hotel investments, let's explore why the market is ideal for hotel investing. So in 2019 and 2020, hotels really rose to the challenge. They had to reimagine their entire hotel experience from the bottom line and streamline their operations, all of which impacted their net operating income. The value of any commercial asset is derived from net operating income. So with NOI decreasing, the value of hotels has decreased, which means they are quote unquote on sale with great economic indicators for future growth. So some of the things that were implemented that helped hotels rise to the challenge was the Clean Stay Initiative. Industry-wide hotel cleaning and safety standards were implemented, recognizing that the hotel business is largely a human contact business with numerous guests and employee touchpoints. The Stay Safe program was created based on CDC standards and has been implemented across the country. Another way that hotels rose to the challenge was creating attractive packages and partnerships or strategically forging new relationships. Operators and asset managers of the travel industry recognized that they needed to replace the jobs that were formerly filled by large gatherings and conventions. As a result, they marketed staycations with food and beverage offerings to local and established partners with hospitals and to accommodate healthcare workers. Many hotels also embraced the concept of working from home and encouraged business travelers to work from their top-line rooms while taking advantage of packages including room service and health or fitness plans. Revenue strategy got a major makeover. Revenue managers were forced to evaluate which strategies and marketing techniques really drove income. Discounts, for example, did not result in greater occupancy, but rather stronger focus on client communication resulted in unrivaled rapport with clients and repeat business. As you can imagine, existing spaces were reimagined to accommodate with many of the new CDC and COVID-19 protocols. Hotel owners were required to determine what socially distant looked like, what safe stay would really be like for a user experience for their guests. This led to unprecedented degree of versatility, reduced contact, and increased technology and convenience being implemented in every nook and cranny possible, many times with the help of technology. Operation expenses were also streamlined. By analyzing their contracts with marketers and operators, lenders and service providers, and asset managers were able to reduce expenses. This was critical that they defer payments, avoid fees, waive minimum order or contribution standards, and accommodate to payment strategies in coordination with their industry partners in order for everyone to survive the downturn. With all of that rising to the challenge, we're excited where industry numbers are looking for 2021 and beyond. So the hotel industry has been forging forward. People are feeling more comfortable with tourism and traveling, and according to the latest edition of the United Nations World Travel Organization World Tourism Barometer, an estimated 54 million tourists crossed international borders in July of 2021. Now, this was down 67% from the same month in 2019, but this is the strongest result since April of 2020, What's more encouraging is that the daily TSA numbers continue to be 250% more of what they were the same day in 2020. So travel was down in 2020, as we all expected, but it's been picking up. And this is why it's the perfect time to invest in hotels. Again, hotels are considered discounted right now because of what is showing on their net operating income. And we only project that there's going to be future growth with more and more travel expected for 2022, especially through 2024. Now that we understand a little bit about the hotel industry and how it rallied during COVID-19 and is foraging forward in 2021 and beyond, that hotels, again, are on sale. So let's explore why you might want to invest in hotels. So when I think about investing in a different asset class than what I'm used to, I like to compare and contrast. So with multifamily syndications, there's three main benefits for investors that also overlap with hotel investors. So they both get tax benefits, cost segregation, and high risk adjusted returns. Hotel investors get additional benefits by nightly stay, additional revenue, and the unique expense structure with hotels. So let's dive into this a little bit further. High yield is one of the most frequently cited reasons for real estate investors to invest in hotels. Across the board, hotel cap rates are greater than those of other business assets, and they do, however, carry a higher level of risk to manage, which is why you want to work with experienced real estate manager. Tax benefits. So the tax benefits of hotel investments are quite unique since they incorporate real, personal, and intangible property. As a result, investors do not only get the tax benefits and depreciation limitations for real estate, but also those for personal and intangible property. Cost segregation. Hotel investments are divided into three categories for tax purposes: building, furnishing and equipment, and goodwill. The first two, buildings and furnishing, are real items. Customer loyalty, employee relations, and other intangible factors that contribute to the hotel's success are known as goodwill. So hotel investors get the additional benefit of nightly stays in boosting revenue. So every night is another chance to boost income. Many hotels use predictive analytics and technology to optimize each additional night's netly earning per room sold. So what this means is every new day has a new ability to maximize earnings and pump up revenue. Expense structure is unique again to hotels and another benefit for hotel investors. One of the most compelling reasons to invest in hotels is because administrators can negotiate with providers due to volume, reduce operating costs while revenue continues to grow. As revenue rises, the cost to maintain the hotel doesn't go up drastically, which allows for a healthy profit margin. And as we discussed, hotels really did an amazing job at rising to the challenge and negotiating those contracts for as low as possible based off of their operating expenses. And so that continues to apply a healthy margin, a healthy profit margin with all of the expected growth that we anticipate. Okay, so when you're looking at how to quickly evaluate hotel syndications, three main things come to mind. Location, location, location. You want to look at the type of hotel and evaluate the business as a whole. So what I look at is location. Is this property near airport? Is it near a major travel destination? Is it close to some additional features and benefits? Like, is it right on the ocean, or is it near some sort of tourist attraction? The type of hotel, again, remember the three types: full service, select service, and limited service. The type of hotel, again, that we recommend is that middle of the road select service because of the ability to add additional amenities and increase your net operating income. And then the last thing, evaluate the business. Does the returns that they're projecting make sense based off of the market, make sense based off of how they're mitigating risk, and make sense off of how they plan to manage the asset in general. So hopefully you've learned at least one new thing and you were reminded of at least one thing that you appreciate about multifamily investing. So some next steps are you can go to the Goodegg Investment blog and view our blog articles, 10 reasons to invest in hotels and why investor attention is on select service hotels. And then in a couple weeks on the Life and Money podcast, Annie and Julie are interviewing Harsh, who will be talking about his robust experience in the hotel industry. And from there, if you have any questions specifically about hotel investing, go ahead and send us an email at investorrelations@goodegginvestments.com.